Okay, let's talk about car prices right now because we know they're still pretty high, especially with the interest rates as high as they are. And if you're in the market for a new or used vehicle, it may be out of reach.
Jeep's biggest inventory disaster is unfolding right now, and it's dragging entire towns down with it. Showrooms look like graveyards, workers are bracing for layoffs, and local businesses are already losing the lifeline Jeep once gave them. The crisis isn't coming, it's here. Who's paying the price for Jeep's mistakes? How many more jobs vanish when the plants go quiet? And what happens to your community when the dealers shut their doors? The lot that time forgot. Imagine walking onto a Jeep lot and seeing row after row of shiny SUVs that nobody is buying. You notice the stickers still showing 2022 models, sitting right next to 2023 and even 2024 editions. It looks less like a dealership and more like a time capsule, frozen by corporate missteps. For the average person, that sight is infuriating because it proves Jeep is building cars people simply do not want at prices no one can afford. Dealers are suffocating under the weight of it all. Stellantis, Jeep's parent company, is holding a 77-day supply of vehicles. Last year, it was 59 days. That extra 18 days may not sound like much until you realize dealers are paying interest on every unsold car clogging their lots. To small-town owners, each day a car sits is money slipping out of their pockets while the company keeps shipping more. These lots tell a story of arrogance at the top and frustration at the bottom. The vehicles are polished, but behind the shine is debt piling up for dealers and frustration for customers who know they're being priced out. And the question hanging over everyone is clear. How did Jeep let it get this bad? Because the real disaster isn't what you see on the lot. It's how those cars got there. Forecasting failure. This wasn't just bad luck, it was a failure of judgment. Stellantis bet that families would suddenly trade up from $30,000 cars to $100,000 luxury Jeeps. They overshot what people could afford and miscalculated the reality of the economy. While households tightened their belts, Stellantis kept building high-priced models as if paychecks were growing faster than inflation. The result was brutal. Jeep sales fell 19%, while Ram, another Stellantis brand, plunged 26%. Those aren't small dips, they're warning lights flashing across the dashboard. Ordinary people simply are not lining up to buy vehicles with price tags bigger than their annual salaries. Instead of adjusting, Stellantis kept cranking out more inventory, convinced the buyers would eventually show up. They didn't. That misread is what transformed dealerships into parking lots for unsold metal. What looks like a supply problem is really a demand collapse. The company missed the curve, and regular families are the proof. You can't sell $100,000 SUVs in a world where most households are fighting just to cover groceries and rent. And when Stellantis refused to adjust course, the frustration from the ground began boiling over. Dealers themselves started pushing back. If you're still watching, you know how deep this goes. Hit like if you're shocked by what's happening, and drop a comment with your take. Your voice matters here, and I want to hear it. Dealers rebel. Dealers aren't whispering anymore. They're furious. Many are telling Stellantis to stop burying them under cars they can't move. They see every delivery truck as another load of debt arriving at their doorstep. Floor plan financing, the loans they use to hold cars on their lots, was once manageable. Now it's crushing. Profits across the Jeep dealer network have shrunk by 1/3, and some family-run operations are staring down bankruptcy. For these dealers, it isn't just numbers. It's livelihoods. Employees are being cut, mechanics sent home early, and showroom staff left standing around with no customers walking in. Local economies that rely on dealership traffic are taking the hit too. From diners to detail shops, every empty showroom ripples through a town. Dealers feel abandoned. Stellantis keeps sending inventory while offering little help to clear it. Many are considering offloading cars at a loss just to keep the lights on. They are drowning, suffocated by decisions made far above their heads. And when dealers, the closest link to customers, start shouting this loudly, it's a sign the crisis is no longer hidden. But it wasn't just dealers who were angry. Workers on the factory floor began to see this as their fight too. Workers smell betrayal. When promises break, workers don't stay quiet. They fight back. Inside Jeep plants, morale is collapsing. Layoffs in places like Toledo have already hit, and rumors swirl that production could shift out of the country altogether. For communities built around these plants, the fear is real. Fewer shifts mean fewer paychecks, and fewer paychecks mean whole towns feel the pain. The United Auto Workers Union now has grievances covering 98% of Stellantis employees. That number is staggering. Almost the entire workforce accusing the company of broken promises. Workers say Stellantis pledged investments, upgrades, and job security that never came. Instead, they are watching the company push overpriced vehicles that customers reject, while they bear the brunt of the fallout. The shop floor is tense, a powder keg ready to ignite. Every rumor spreads faster than the assembly line once moved. Families who have built Jeeps for generations wonder if they'll be the last. Workers feel betrayed, as if the brand they kept alive through decades is leaving them behind. And with trust shattered both in the showroom and in the factory, Stellantis tried a desperate move, bringing in new leadership. That's when the company introduced a new boss, but his first moves shocked everyone. The new CEO's gambit. The first memo from Stellantis' new chief wasn't about growth, it was about survival. When Antonio Filosa stepped into the role, his priority wasn't shiny new launches or bold marketing. It was to stop the bleeding. For months, dealers had been buried under mountains of unsold Jeeps, and workers were watching hours vanish. Filosa made it clear shipments had to be cut, and aged inventory had to be cleared, no matter the cost. By the close of 2024, Stellantis reduced United States inventory by 100,000 vehicles. On paper, it looked like a win, but on the ground, the cuts felt more like triage. Dealers finally saw relief from the non-stop flow of trucks unloading vehicles they couldn't sell, but the sudden pullback left factories in shock. Production slowed, workers lost shifts, and suppliers saw orders vanish overnight. For Filosa, this was about proving he could steady the ship. For dealers and workers, it felt like the ground shifting beneath their feet. Inventory was shrinking, but so were paychecks, and the uncertainty left everyone on edge, because trimming shipments was only the first move, and the consequences rippled straight into the plants. Factories go silent. What happens when a factory's biggest achievement is parking cars nobody wants? That's the harsh reality now facing Jeep plants across America. The assembly lines that once roared with activity are falling quiet, with shifts cut back and entire sections idled. In Toledo, layoffs have already struck, leaving workers wondering how long their jobs will survive. When production slows, the pain doesn't stop at the factory gates. Suppliers who depend on Stellantis contracts are being crushed. Small parts makers that thrived on steady orders now face canceled shipments and empty books. For many of these smaller businesses, there is no backup plan. When Jeep slows, they collapse. The domino effect is brutal. One canceled order at the top becomes lost paychecks for dozens of families down the line. Communities that built their identity around Jeep feel abandoned. The diner across from the plant, the gas station near the highway, the little shops that thrived on worker traffic, all of them suffer when shifts vanish. For workers, it's more than lost hours. It's the sinking fear that their town is next in line to go quiet. And as the machine slowed, the financial numbers began turning red. Cash flow in reverse. A company can look massive on paper and still be running out of air. That's where Stellantis finds itself now. With inventory piling high and factories slowing down, the financial strain is impossible to ignore. Net income has plunged by 48%, wiping away nearly half of its profits in a single year. For a business built on premium pricing and steady margins, this is a collapse. Negative cash flow has become the new reality. Dealers can't sell, workers aren't producing, and yet interest charges keep draining money from the system. What should be a cycle of cars turning into revenue has turned into a sinkhole swallowing cash. Executives talk about long-term strategies, but the immediate truth is unavoidable. Jeep is losing money faster than it can patch the holes. Numbers on quarterly reports hide the human reality. Shrinking margins mean slashed budgets, delayed projects, and canceled community investments. Each percentage point lost translates into fewer jobs, fewer opportunities, and more uncertainty. For workers, suppliers, and families, Jeep's financial sinkhole isn't abstract. It's the ground disappearing beneath their feet. Wall Street analysts may debate numbers, but families and workers feel the squeeze in real time. Dealers slash staff, workers lose shifts, and communities lose tax dollars. The black ink that once funded expansion is now red ink scaring investors away. The collapse of cash flow is not just a business story. It's the clearest sign that Jeep's model is breaking down. And just when the money dried up, the people Jeep needed most, the customers, walked away. Consumers walk away. For everyday buyers, Jeep showrooms no longer feel exciting, they feel intimidating. Walk inside, and the price tags hit like a punch. The Grand Wagoneer averages over $100,000, and even smaller SUVs are marked higher than many families can handle. Shoppers aren't lining up. They're leaving, heading to used lots or to rivals offering more affordable choices. This isn't just sticker shock, it's frustration. Jeep once stood for practicality, toughness, and affordability. Now, customers see a company chasing luxury while ignoring reality. The brand feels out of touch, and the proof is in the sales figures. Families already squeezed by rising costs look at Jeeps line up and say, "Not for us." Families aren't walking into Jeep showrooms with excitement anymore. They're walking out with frustration. Price tags read like luxury brands, but the experience doesn't match. Buyers compare, calculate, and quickly decide their money goes further elsewhere. Every lost customer isn't just a missed sale, it's loyalty slipping away forever. Dealers feel it too. Showrooms that used to buzz with energy are ghost towns. Rows of polished SUVs sit untouched, while buyers sign papers across the street for cheaper, more sensible cars. The loyalty Jeep relied on for decades is cracking. When customers start walking away in droves, the problem isn't marketing. It's a disconnect between what people want and what Jeep is forcing onto the lot. And just as buyers turned their backs, new pressures from Washington and Beijing made the storm even worse. Tariff bomb. When tariffs hit, Jeep didn't just lose money, it lost its grip on survival. The same inventory already piling up on lots suddenly became even more expensive to move. Stellantis, Jeep's parent company, was hammered with new duties on imported parts and vehicles, creating a tariff bomb that blew another hole in the balance sheet. Every shipment now arrived heavier, weighed down with fees that drained already thin margins. The numbers sting. In the first half of 2025 alone, tariffs ripped away $350 million. For a company already drowning in unsold stock, that was like dropping an anchor on a sinking ship. Dealers who couldn't move Jeeps before found it impossible now, because higher costs meant fewer discounts and more hesitation from buyers. Tariffs didn't just raise costs, they destroyed predictability. Jeep suddenly faced bills that no spreadsheet could soften, forcing executives to scramble while dealers panicked. Every shipment carried new uncertainty, every sale less profit. What was once a growth market turned overnight into a money trap with no easy escape. For customers, this meant showrooms filled with overpriced vehicles that felt even further out of reach. Jeep could not cut prices without burning through cash, and it could not hold prices without losing buyers. Tariffs left them trapped in a no-win corner, and while tariffs drained money, they also started draining something even harder to recover: trust in Jeep's reputation around the world. Global reputation in freefall. Abroad, Jeep is no longer the rugged icon people grew up admiring. It has become a cautionary tale. In Europe, buyers who once considered Jeep for its toughness now see outdated technology and inflated prices. In Latin America, where Jeeps used to symbolize grit, families are choosing cheaper, more practical SUVs from competitors. In Asia, the brand struggles against rivals offering sleeker electric vehicles and better tech. The image erosion is severe. What used to feel aspirational now feels unrelatable. Jeep is no longer the vehicle that everyone on the block dreamed about. Instead, it's the overpriced SUV sitting unsold under showroom lights. Prestige has slipped, and once loyal customers are turning elsewhere. When a brand's image cracks abroad, the damage always circles back home. Jeep once stood for toughness and trust, but now foreign buyers see it as overpriced and outdated. Losing global confidence doesn't just shrink sales, it erodes the very identity that kept customers loyal through generations. For the average person, this confirms what they already suspect. Jeep is out of step with what people actually want. Too much focus on high-end models, too little attention to affordability, and almost no clear path forward in global markets. Dealers see the same pattern. Cars that should be moving sit untouched, while competitors gain ground. And that slide in reputation connects directly to the slowest, most dangerous mistake of all: Jeep's lag in electric vehicles. EV delay. Wrong bets. Jeep's electric dream is starting to look like a nightmare. While competitors rushed electric models to market, Stellantis hesitated, betting buyers would stay loyal to big internal combustion SUVs. That gamble has backfired. Instead of waiting around, customers embraced other brands, leaving Jeep stuck with lots full of gas-powered vehicles, just as governments and consumers shifted their expectations. The numbers tell the story. Stellantis holds only a sliver of global electric vehicle market share, while competitors like Tesla and BYD soar in double digits. This technology gap has left Jeep behind the curve, forcing dealers to sell vehicles buyers increasingly see as yesterday's news. Shoppers want lower running costs and government rebates tied to EVs, but Jeep isn't ready to deliver at scale. The danger isn't just falling behind. It's being forgotten. Buyers no longer wait for Jeep to catch up. They move on to brands delivering the future now. Every month, without competitive EVs cements that gap. What was once a delay is becoming abandonment. And abandoned customers rarely come back. For families, it's simple. Why buy a Jeep that guzzles gas when competitors offer electric options that are cheaper to run and future-proof? For workers, the delay means uncertainty. Factories producing the wrong vehicles at the wrong time. For dealers, it means showrooms clogged with SUVs buyers are avoiding. Jeep's wrong bet on EV timing has turned an inventory problem into a full-blown crisis. And while Jeep stalled, regulators began circling with penalties. Regulators close in. When regulators close in, even giants stumble. Jeep is learning that lesson as both American and European authorities tighten rules on emissions and electric vehicle quotas. Governments aren't offering unlimited patience anymore. They're demanding results. For Stellantis, that means delivering affordable EVs at scale or paying the price in penalties. Subsidies once looked like lifelines, but they come with strings. To unlock funding, Stellantis has to prove it is meeting milestones in EV production and emissions reductions. Missing those marks means fines stacked on top of already crushing losses. Compliance has turned into a regulatory noose. Every delay tightens it further, leaving Jeep with fewer options. For buyers, this creates more confusion. Some models may qualify for incentives, others may not, and the lack of clarity drives people toward competitors. For workers, the stakes are clear. If Jeep fails these tests, factories could close and jobs could vanish. For dealers, the uncertainty makes selling even harder. They can't promise future value when regulations threaten to penalize today's purchases. Every deadline missed adds another layer of pressure. Regulators aren't waiting, and patience is gone. Families can't trust a brand tangled in penalties, and dealers can't sell with uncertainty hanging over every model. Each failed compliance step deepens the crisis, leaving Jeep cornered between shrinking options and mounting costs. Jeep is now squeezed from every angle. Inventory piling up, tariffs draining cash, reputation sliding, and regulators demanding answers. And while Washington watched, Main Street dealers began collapsing. Dealers on the brink. For Jeep dealers, every unsold car is a ticking debt bomb. Each SUV that sits on the lot isn't just metal, it's money bleeding away day after day. Floor plan financing, the loans dealers take to hold inventory, is supposed to be a bridge until the car is sold. Now it's become an anchor, dragging entire dealerships underwater. Across the Jeep network, profits have shrunk by 1/3, and many family-run stores are staring bankruptcy in the face. The damage doesn't stop at the dealership doors. Communities built around these businesses are drowning too. Mechanics are being sent home early, salespeople are losing commissions, and support staff are watching hours vanish. The diners that fed them at lunch, the detail shops that prepped their inventory, even the local sponsors for Little League teams, every one of them feels the squeeze. Some dealers describe it as drowning in slow motion. They watch shiny SUVs sit untouched while interest bills stack higher each month. Families who poured generations into these businesses now face foreclosure. For them, Jeep's crisis isn't abstract. It's the difference between survival and losing everything they've built. For everyday people, it's a bitter pill. These dealerships aren't faceless corporations. They're small-town employers, but Stellantis keeps pushing more vehicles while offering little help to clear them. Some dealers are now unloading Jeeps at losses just to survive. They are collapsing under the weight of decisions made far above their heads. And while dealers fought to stay afloat, workers inside the plants prepared for their own battle. You've seen how massive this crisis really is. If you don't want to miss the next update when things get even worse, hit subscribe right now. This is unfolding fast, and you need to stay ahead. The union strikes back. 98% of Stellantis workers are covered by grievances, and they're not bluffing. For employees who have spent years building Jeeps, this crisis feels like betrayal. They kept the lines running through tough times, yet now they watch their jobs cut back while unsold cars pile up in lots across America. The anger is palpable, a powder keg waiting for a spark. Workers say Stellantis broke promises about investment, product plans, and security. Instead of the future they were assured, they face layoffs, shortened shifts, and talk of production moving elsewhere. Families who once counted on Jeep's steady work are left guessing if tomorrow's paycheck will still come. On the shop floor, frustration has hardened into readiness for a walkout. For many workers, this fight isn't just about contracts, it's about dignity. They've watched executives ship cars no one can sell while cutting the very jobs that kept Jeep alive. That betrayal has hardened into determination. The message from the factory floor is clear. Either respect the workforce or expect a strike. A strike in this climate could cripple Stellantis. With dealer lots already overflowing, a production halt would make recovery almost impossible. But for workers, it's not about saving the company's balance sheet. It's about fairness, about demanding that the brand that once symbolized American strength stop abandoning the people who kept it alive. As workers drew their line in the sand, Investors on Wall Street decided they had seen enough. Wall Street walks away. Investors once saw Jeep as a cornerstone of stability. Now they see it as a liability dragging Stellantis down. Confidence has cracked. Analysts describe the situation as a downgrade spiral, where every new report of weak sales, collapsing dealer profits, or looming strikes drives investors further away. The stock has plunged, and debt markets are tightening, forcing Stellantis to pay more just to borrow the cash it needs to survive. For investors, this isn't about short-term bumps, it's about trust. They no longer believe Stellantis can steer Jeep back to solid ground. Instead of rugged dependability, Jeep now represents risk. Risk of more unsold inventory, risk of angry workers, risk of mounting losses. The investor flight leaves Stellantis even weaker, stripping away the cushion it once leaned on during downturns. Investors aren't just worried about numbers on a spreadsheet, they're worried about trust. When confidence disappears, money follows. Wall Street sees Jeep as too risky, too unstable, and too burdened with unsold stock. Once investors walk away, rebuilding faith takes years, not months, leaving Stellantis exposed to even deeper losses ahead. What started as a problem in dealer lots has now shaken global financial markets. Wall Street is sending a message loud and clear. Jeep is no longer untouchable. And as investors retreat, the realization sets in across the auto industry. This isn't just Jeep's crisis, it's a warning for everyone. An industry at the crossroads. Jeep's collapse isn't just the fall of one brand. It's a crossroads for the entire auto industry. For years, companies pushed bigger, pricier SUVs, betting families would stretch endlessly to keep buying them. Now the bubble has burst. Repossessions are climbing, defaults on auto loans are rising, and customers are saying no to vehicles that cost more than their homes. Jeep just happened to be the first to get caught with lots full of overpriced stock, but every automaker knows they could be next. The domino effect is spreading. Communities lose jobs as dealerships close, workers lose security as factories slow, and investors lose patience as profits vanish. What was once a business model built on endless growth is now a cautionary tale of what happens when companies ignore affordability and reality. Families don't care about corporate strategies. They care about making payments, keeping jobs, and driving cars that fit their budgets. And here's the part too many executives refuse to admit. Customers are smarter now. They compare, they calculate, and they walk away when the deal makes no sense. Loyalty alone will not save a brand anymore. If the price doesn't match the paycheck, people won't sign the papers. And that reality is unavoidable. Jeep's inventory crisis proves the market has changed. The industry can either adapt by building vehicles people can truly afford, or it can keep chasing inflated margins until more brands crumble. For the average viewer, the lesson is chilling. If Jeep, with all its history and power, can fall this hard, then no automaker is safe. If Jeep can fall, who's next? Jeep's inventory crisis isn't just a headline, it's a warning. When cars pile up unsold, communities suffer, workers lose trust, and families face harder choices. What you've seen here is only the beginning. The question now isn't whether Jeep survives, but how far the ripple will spread. Will other automakers repeat the same mistake? Will towns lose the employers they've counted on for generations? If this story opened your eyes, make sure you're here for the next one. Subscribe, because the changes coming to this industry will affect you directly, and you cannot afford to look away.